Okay, everybody, here we go. It is me, Gregory Mannarino. It is Sunday, March 12th, 2023, and this is my newest segment of Markets, a look ahead, and we have a lot to talk about. People, again, you all know that I'm a macro guy. I like to look at the big picture on a global level, and I'm telling you right here and right now, and this is no surprise to you, we are in the early stages of an accelerating systemic breakdown of the financial system, and in no way, shape, or form is this by accident. I mean, just consider what's going on a macro level. We have a global economy which is cratering at its fastest pace ever in history. Meanwhile, we got central banks collectively raising rates into an environment where the economy is falling off of a cliff. I mean, it is deliberate. Now, this issue with Silicon Valley Bank, it's getting airplay on the regular news outlets, the financial news outlets, but there is a protocol in place, and it's what you would have expected to see right here. It's the blame game. Okay, the investigation into what happened hasn't even started, but they're already assigning blame. This morning on Bloomberg, they floated out Larry Summers, another authority figure on, I guess, the financial system here. The guy's a freak. Okay, now he's out here this morning blaming the bank managers. Another freak, or the news outlet, is blaming borrowers who were apparently burning through cash. Meanwhile, they were paying back their loans here. Again, this has to play out this way, the blame game, to keep people distracted from who's actually responsible. Where were the bank regulators? Where was the U.S. Treasury? Where is the Federal Reserve in all this? They must remain blameless because, again, confidence must be restored into the system. Now, as you can already see, and this was obvious, okay, is a piece I want to read to you in just a little bit. They're already talking about a buyer or buyers for the good assets on SVB's bank balance sheet. And there's already talk about a government bailout. Government bailout would be the government, or you and I, get to own all the bad assets while the mega banks get to buy all the good assets at fire sale prices here. If you think this is by any accident at all, you don't know what's going on. We're going to see a consolidation of the banking system, and this shouldn't surprise anyone. Power concentrated yet again in the few. So what I believe, we're not done here. There is going to be some kind of contagion. There's just no way that this one bank is going to go bad here. Look, let me say this too. Bank failures, these are somewhat normal, but this particular one is rattling the market because, first of all, this is the 16th largest bank in the U.S. by assets. Okay, and there's a whole other thing going on here. Oh, why is it that no big bank stepped in here to bail it out or to set things right? Well, we're going to talk about that in the paper I want to read to you. But what I want you to take away from this video, honestly, is we are, again, and this is no surprise to a single person that follows this blog, this has been going on, in the very early stages of a deliberate systemic failure of the financial system. This is being pushed by central banks who want to kill the current system, issuing a new one. They have to kill the current system first, and they have to create panic. They have to create a reason why we need this new system. You understand? We need it because the old one's dying. They know that, and it's being pushed in that direction, obviously. Again, cratering economy. They're raising rates into a cratering economy. And that mechanism here is fostering everything that we're seeing here, an elimination of the middle class on a worldwide scale. Now, it's just interesting here. If you were paying attention to the debt market, which I know all of you do, we watched the 10-year yield drop over 30 basis points last week. Now, that's profound. That is profound. Again, put this into perspective. The debt market is supposed to remain stable. It's supposed to be the rock by which everything else hinges. Now, this instability here in the debt market, it shouldn't surprise anybody either. How many times have I been telling you that the debt market is unstable over the past many months? It's completely unstable, all right? And these gyrations are rattling the market. MMRI drop, okay, I understand that. But the MMRI is telling us as clear can be that this market remains in a high risk zone. I mean, it couldn't be easier for you to read. Again, in the description of this video is a link to the MMRI. I color coded this for you. Actually, the guy who helped me create that on my website. I mean, I came up with the MMRI, and John Rust helped me get that graph on my website. That's way above my pay grade. I have no idea. But these are all color coded. You can see where we are. We remain in a high risk zone. And I think this moment of maximum saturation, which I've spoken about for freaking years, is really becoming real here. The debt in the system has become so toxic and so overwhelming that the system is breaking down right before our eyes. But what are they going to do? They're going to continue to inflate, in my view, until they're ready to pull the plug. Is that plug being pulled right now? Well, we're going to see. We're going to see really soon here. And again, looking back on this month, at the end of last month, I explained to everyone here, we discussed it right here, go check my videos, that this month of March is going to be generally very bad for the market. And, this month and October are kind of the months that really spook in investors. Anyway, people, with that said, I want to read this to you. I want to ad lib. Now this, if you subscribe to my free newsletter, this right now is in your inbox. If you do not subscribe to my free newsletter, I don't know what you're waiting for. I want you to have copies of these things that I write. Print them out, share them, do anything you want with these things, okay? These are important. These are really important in my view. So let's read this. I'm going to ad lib through this, and this is going to give you a real perspective as to what's really happening, what is actually going on with Silicon Valley Bank, the collapse of Silicon Valley Bank, and why we are going to see more. Okay, so let's start off with the title here. Accidental banking system failure? Don't you believe it? This is not by accident, by me. Here we go. Are you ready? The overnight collapse of SVB, Silicon Valley Bank, has certainly got everyone's attention. But is this really any surprise at all? Not to a single one of you who follow this blog. You know where we're going. You know what's happening here. You know who the enemy is, and you know what their goals are. This is absolutely not by accident. The collapse of SVB is just a symptom of the current worldwide economic freefall being deliberately fostered by central banks. This is deliberate, and we are not done. Here we go. If you are at all familiar with any of my work or have paid any attention to the many articles I have written for the Trends Journal, I've written a lot of articles for the Trends Journal. I've covered a lot of these things, okay? If you are not a subscriber to the Trends Journal, I don't know what you're waiting for there either, all right? I'm not getting any kickbacks from this, because I know that's the first things people are going to say. Oh, Greg's getting kickbacks from Gerald Celente promoting the Trends Journal. I write for the Trends Journal for nothing, for free. I do it because I believe in what Gerald Celente is trying to do. And if you don't believe, if you want to ask Gerald if Greg's getting a kickback, ask him. Ask Gerald, okay? I am not getting kickbacks. I'm promoting the Trends Journal because I believe it's on the cutting edge of what people need to know, and my work can be found in the Trends Journal as well. Okay, anyway, today the economy is in an accelerating free fall. I think we can agree on that. Anyway, going back to what I was saying, if you are familiar with my work at all, none of this stuff should surprise you. We're already keenly aware of what's going on right now, people. The entire financial system, not just the freak show stock market, is breaking down. And again, this is not by accident. The world economy is in an accelerating free fall, teetering on a knife's edge. Does that sound familiar to you? That's what I've been saying. Being deliberately pushed over the financial cliff by central banks who are collectively attempting to crush the existing system. Why? Only to issue in a new one, a new system of maximum control. They need a massive outcry as well. They need to destroy the current system, create a reason for people to say, hey, please help us. That's what people are doing right now. Shareholders and depositors and people who are associated with the SVC bank collapse are begging, literally begging the government to step in right now, okay? This is what you would expect to see. And the government is also looking for a buyer. Imagine my surprise, imagine your surprise, for the assets on the books. Keep that in mind because we're going to talk more about that. Roughly 8 months ago, and I want you to check this for yourself on my in my blogs here, my past video blogs, I began to warn those who follow my work right here on YouTube that the banks are in trouble. It became too obvious to you and me. I'm laughing, but it's pathetic. No deposits, no deals, and no loans. This is, again, a symptom of a dying economy. Let's talk about that a little bit. So year over year, new mortgage applications have fallen 42%. Refis, over 75%. This is what's going on here. But why isn't anybody talking about that? Oh, because you're not supposed to know. I forgot. That's right. You must be kept in the dark. Anyway, it just became too obvious the current situation with the banks come down to just three things. No deposits, no loans, and no deals, people. In truth, and I've said this before, it's not the banks who are in trouble, but we, the people, as always, we're in trouble here. You think I'm lying? Look at what's going on. The fallout from this one bank failure, it hasn't even yet begun to be seen. What about the people that lost their jobs? I'm going to cover more about that here too. And just some of the fallout from the SVC collapse is this. Depositors with more than $250,000 in their accounts, and there are a lot, will never be made whole, nor will the shareholders who were just being told to buy the stock. As a matter of fact, Jim Cramer was telling people to buy the stock a month ago. Thanks, Jim. Anyway, it's crazy. Of this particular institution, you can't make this stuff up. It's absolutely crazy. Anyway, just a few days ago, people were being told to buy this stock. And what about the throngs of people who just became unemployed? The greatest threat? What's the greatest threat to this? Okay, it should be obvious. The collapse of these smaller regional banks and institutions will allow the mega banks to consolidate power. And that is what this is all about. Don't take your eye off the big picture. We are again going to see a consolidation of power to the very few, the Wall Street mega banks. They're going to get a lot stronger because of this. And again, where were the banking regulators in all this? How did they not see this coming? Or is it possible? Pay attention. Or is it possible that the regulators did see this coming and they just turned a blind eye? Remember this, people. In the current environment, nothing is what it seems to be. Does that sound familiar to you? I've been telling you that forever. Why would banking regulators just allow an overnight collapse of SVB, the 16th largest bank by assets in the U.S., to occur? And are we likely to see, I guess this is the big question, are we likely to see more regional and smaller banks fail? Think about that because I'm going to talk about it. Are we really to believe that the banking regulators are just incompetent? Moreover, as a reality check, people, understand there is absolutely no way that the Federal Reserve nor the U.S. Treasury could not have seen this coming. Remember, no deposits, no loans, and no deals. If this no deposits, no loans, and no deals situation is in here is just plainly obvious to you and I, are you trying to tell me that the banking regulators didn't know that? That the Treasury didn't know that? That the Federal Reserve doesn't know that? Of course they do. Of course they do. This is being engineered. A collapse and a meltdown of the regional banks and the smaller banks is deliberate. This is to create a consolidation of the entire banking system. Power, again, controlled by the few. Imagine my shock here. Imagine your shock here. So anyway, let's ask another question. Why didn't a single large bank step in and bail out Silicon Valley Bank? Well, the mainstream media financial commentators appear to be completely baffled. They have no idea. None at all. They just don't know why no big bank offered to jump in and save SVB Bank. Well, here is why. Are you ready to know the truth? The collapse of SBV, and there will be others, creates a fire sale opportunity for the major banks. Not a single major bank stepped in to save SVB because now this collapse presents them with a major opportunity to now be able to acquire assets from this collapse for next to nothing, for pennies on the dollar. Imagine, we saw this before. This is a replay of what happened with Bear Stearns when all the good assets of Bear Stearns went on fire sale, and J.P. Morgan bought them all. And who bought the bad assets? You did. Didn't you know that? Oh yeah, you own them. The government did with the bailout. Yeah, it's on your bank, your back. Imagine my shock here. Anyway, now the mega banks are going to become even larger as more regional bank collapses occur and allowing more fire sales. I'm almost done with this. I fully expect that the overnight collapse of SVB will be followed by more smaller regional bank failures, and that means more fire sales of assets and opportunities for the major banks who will consolidate power. In my opinion, we are about to see a consolidation of the entire banking system accelerate, with more power and more assets concentrated in the Wall Street super banks. Any contagion regarding regional and small bank failures will, of course, allow for the too big to fail institutions to get much bigger. So, in summary, do you really believe that any of this is by accident and no one saw this coming? You and I did. This whole thing is going to come down. It's going to come down a lot worse. Read this bottom line. Expect more regional, smaller banks to fail. By design. There is no accident here, people, okay? This is a consolidation of power. This is the mega banks who are going to become even bigger. And they're going to get assets for nothing, as they go on fire sale. Imagine my shock. Imagine your shock. Anything surprise you here? I don't think so. Nobody that follows this blog is surprised at all. You know what? I'm damn proud of that. And I'm telling you, right here and now, I'm going to tell you again right here and now, if you're new, you haven't seen anything yet, people. We are watching a deliberate systemic breakdown and a consolidation of power here. The mega banks who have direct main lines to the Federal Reserve. These smaller regional banks, they're just done. All right, they're just done. And you're going to start to see this accelerate now because people are going to, again, lose faith in the system by design in the smaller banks. Oh, we got to get our cash out of these smaller institutions. Even ones that may or may not be sound are going to lose, okay? Because the system works on what? How does the system function? Confidence. If people lose confidence in the smaller and regional banks, what are they going to do? Are they going to pull their cash out and stuff it under the mattress, which is what they probably should do now? They're going to pull their cash out of the smaller institutions and put it right into the Wall Street mega banks. Oh, remember where you heard that first? Right here. Yeah. That's how it's going to play out. All right, people, look, what else can I tell you here? Let's see how this market responds to this over the next week or so. This whole month, again, volatile month. Keep your eyes on the debt market. Honestly, the MMRI. Let's see where this goes. Let's see if the sell-off continues. Let's see if the cavalry comes to the rescue and we start seeing some miraculous buying of large cap stocks, maybe even large banks. Oh yeah, don't be surprised. Don't be surprised at all to see the mega bank stocks just miraculously go up. Oh, why would that happen? Well, again, to instill confidence, look at J.P. Morgan, which actually gained on Friday. Look at Bank of America. Look at Morgan Stanley. Their stocks are rising. Maybe we should put our cash there. It's a game. It's a game, people. Who's going to be doing all the buying? Well, of course it'll be the Federal Reserve. You think any of this is real? None of it is real, people. None of it. Anyway, look, this is a long video. I want to hear from you. Where did I get it wrong in this video? Where did I get it right in this video? Do you see eye to eye with Greg Mannarino? Something tells me you do. All right, people, look, this guy here loves you a lot. I mean that from the heart. I want you to share this video. I want you to get it out there. I want you to have a copy of this. All right, like I said, this paper right now, if you subscribe to my free newsletter, is in your inbox. And if you don't subscribe, subscribe now and get a copy for yourself. Do anything you want with it. You have my permission to share this. Do anything you want with this. I think it's important, and I want you to have it, all right? I will see all of you in the morning. I'm out of here.